Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew. With me is Cheryl D'Souza. Let's quickly take you through what the markets are doing at this moment. It started off positively with the Nifty opening at, in fact, 15,323. That was just about 20 points or so higher than yesterday's close. We gave up those gains, and on the lower end of the spectrum, we traded at a low point of 15,278. So all told, a very narrow range for the Nifty 50 as we speak. Currently, we are trading above the 15,300 mark, closer to 15,320 or thereabouts. But today, if anything, is the story for Nifty IT. And if you look at the Nifty 50 top gainers, you'll see quite a few of the Nifty IT names in the top few gainers. You have the likes of WIPRO, TCS, Infi, also Tech Mahindra and HCL Tech gaining quite handsomely in trade today. In fact, all of the components of the Nifty IT, apart from Oracle, are trading in the green as of now. Oracle trading flat right now. Among the other sectoral indices, you have the banks that are looking just a tad bit weak. You have FMCG that's flat, media that's flat, metals that are gaining about 0.2%, pharma that's down about 0.5%, realty that's down about 0.5% or so. But from the broader markets, one of the stocks that stood out in trade and has performed really well over the last couple of hours is V-Guard, up over 4% as we speak on the back of very strong earnings for the fourth quarter. Revenue came in as much as 58% higher on a year-on-year basis. PAT doubled, and you saw EBITDA also doubling. All the segmental revenue was very strong for the quarter. Electronics gaining over 60%, electricals gaining about 58%, and consumer durable gaining about 55%. We're speaking to the management first on ET Now. Sudarshan Kasturi, who's a Senior Vice President and Chief Financial Officer of V-Guard Industries, is joining us. Thank you so much, Mr. Kasturi, for taking the time. I want to start by asking you, this fourth quarter, you've had a very, very strong operational performance. But what is the kind of impact that you're seeing on account of the second wave in the first quarter of the current financial year on sales?
Yeah, so we've had a strong Q4, which also followed a strong Q3. So in the second half of FY21, we've seen the business come back pretty strongly. But then from mid-April onwards, there is a second wave that has hit the country, and it's a more severe second wave. As we speak now, most of the country is under lockdowns, so therefore consumer demand is significantly affected. I think even June is when some of the lockdowns will start getting lifted. I would expect that there is a significant amount of impact on demand during May and June. We'll have to watch for that. There's also a high probability of a third wave coming. The question is, what's going to be the timing and severity of that. So that is something we need to watch for.
Mr. Kasturi, good morning. This is Cheryl also joining in. This is the second year that the summer products have actually, summer product sales have been impacted. This is all on back of due to COVID-19 and the surge in the cases that we're seeing. So what are the current level of sales for these products?
See, as of now, last year around this time, we were in the same position. The full lockdown was in effect. Today, across the country, hardly about 10 or 15% of our channel partners are operational. So the May month is probably something like 30 or 35% of plan. So which is about the same as what last May was.
Mr. Kasturi, despite actually there being an increase in the raw material prices, the company has actually managed to report good set of margins. Are these margin levels sustainable going ahead?
Yes, I mean, there's been significant pressure due to input cost increases. We've tried to sort of keep in pace, and by and large, maybe with some lag, we've been able to catch up on pricing actions. When we look at the Q4 numbers, there is still a little bit of lag on pricing, so it had some impact. We see that gross margins have dropped slightly. compared to that. But I think it is a question of maybe a couple of months, 2-3 months, we would be catching up on prices. But then the risk of further commodity escalation is going to be there, and that's a challenge which businesses have to face. And when it happens, we will try our best to pass on and pass on through pricing.
Mr. Kasturi, if you can lay out for us what are the kind of price increases that you took in Q4. You say that there's a bit of a lag in the kind of increase in prices of commodities and the price increases that you've undertaken, but what have you taken in the fourth quarter, and what will be undertaken in the current quarter? Are we likely to see more price increases?
Yes, we have taken price hikes in stages. Depending on the category, anywhere between 6 to 12% price increases have been taken, not in one step, but in through the months of Q4. There are also some pricing actions which are happening in Q1. So it's been going in stages.
Now, some of these products are incredibly price sensitive. So are you going to be able to hike prices further without hurting demand?
Well, it's a competitive scenario, so it's not just one company or one person who can decide that. It is a function of what the input cost increases, the demand situation, the competitive scenario. We'll have to take all that into account. Yeah, definitely. When prices go up, there will be some impact on demand, but we've got to balance between volume and margins. So that's the balancing act we've got to do.
Your electric segment accounts for approximately 45% of the sales and also caters largely to the real estate market. We've been seeing that the real estate sector is actually seeing a rebound, but actually could you help us understand what sort of a recovery are you seeing in the real estate sector?
Yeah, the electrical segment has done well. We see activity picking up in real estate. So wires plus related accessories like modular switches and switchgear have done well for us. So that's it's been a strong performance from the electrical segment.
And while your consumers continue to sit at home, how is the demand for other home appliances?
Yes, our durable segment also have done well. To call out a few products, kitchen appliances have shown a good growth for us. Fans have also done well. Water heaters not so much because we've had some severe supply disruption issues. But I think with the exception of that, home appliances have done well.
Now, what is the excess inventory that's currently lying with you, Mr. Kasturi, and with the dealers?
Our dealer inventory is about at normative levels. So we have not sort of pushed more stock into the trade. At our warehouses, we are holding a little bit of additional inventory. Basically, learning out of last year's COVID experience is that we need to anticipate supply chain disruptions and have inventory with us when the demand comes up. So we have consciously built some additional inventory at our warehouses, looking at that time we were planning for a strong Q1. But now, given what's happening in May and June, we will then go back and fine tune our production plans, and we will produce as per need. At the moment, we have sufficient inventory.
All right. Thank you so much, Mr. Kasturi, for taking the time and for laying out the picture for us of how your business did in the fourth quarter and how it's likely to function in the current financial year, challenges notwithstanding. We're slipping into a short break, but on the other side, we'll take all of the viewer queries that are already piling up on social media, and that should be really interesting. Do stay tuned. Welcome back. You're watching Buy Now, Sell Now. We've got a couple of guests to introduce. Kunal Bothra is joining us as usual, and we've also got Shahina Mukaddam, who is an independent analyst. I want to come to you, Kunal, before we start the queries, to very quickly get a sense of how you're looking at the benchmarks and also the broader markets. If you can wrap it up very, very quickly for us, that would be great, because 11:15 sharp, we're going to start queries. We've seen a bit of choppy trade, right? It's monthly expiry today. What are we looking at in terms of what are you looking at in terms of the levels that are crucial to watch?
So good morning, Alex. I'll make it very crisp and quick. On the index, I believe that we are still into a very fierce and a strong uptrend. Expiry actions, maybe the indices could be a bit subdued, but I would expect a new high, at least for the Nifty, over the next 1 week. So I think that's going to be something important to watch out for. And a lot of sectors and stocks which are buzzing quite well. So I think the action is getting into much more broader markets and the underperformers as well. So the performers are doing a bit of a rest, but the underperformers like media sector, etc., energy, OMC, etc., are also picking up pace. So all in all, extremely bullish view on the markets.
All right. Good morning, Kunal, Shahina, as well as Alex. Alex, I think I missed greeting you this morning. Let's get on board our viewer queries then. The first query is coming in from Syed, saying that he's bought New India Assurance, 1,000 shares at 166 rupees per share. He wants to know what's the technical view coming in on the chart front for New India Assurance. Also, he is asking, is 200 rupees per share level on the horizon anytime soon? Kunal, what's your take on New India Assurance?
So good morning, Cheryl. I think it looks to be a good buy. I think the breakout is still yet to happen for New India Assurance. I think the breakout is around 166 to 167 on the spot levels. This could probably complete a bullish flag pattern for the stock, and the flag pattern height is almost 15 rupees further from those levels. So you can expect somewhere closer to 180 on the stock price in the very near term, provided the breakout actually happens out. But it's a stock which you can hold on as it is from a medium term to long term perspective as well. So I'm not sure of the exact time frame, but if it's very, very short term oriented, I would suggest wait for a breakout of 166. That could take the stock higher to almost 180 plus. But if you have a slightly longer term time horizon, say another 3 months to 6 months, then yes, the high probability that the stock can come back to 200.
Let me say good morning as well, Cheryl. I think I forgot to do that as well. We've got a question next on persistent systems, and this one's from Chintan Kapadia. He's bought at levels of 1,000, which is quite the amazing entry point, Shahina. He's wondering whether to book profits at this juncture or to hold on for further gains.
He should hold on for further gains, in my view. I think it's looking pretty good even from current levels. I think while the stock has rallied, they had reported a very healthy set of numbers in the 4Q. And I think that with the sentiment positive for IT stocks as of now, one should continue holding persistent systems.
Right. The next query is coming in from Santi on the new listed company, that's Nureka. Wants to know that the stock has actually fallen from its recent highs of 1,750 rupees per share. The stock has gained 3 times from April 2021 price of about 580 rupees per share. So wants to know what's the reason for such bullishness in this particular counter, what could be a good price entry, as well as what sort of a target should one look at for Nureka. Shahina, what's your take on Nureka? It's a very recently listed company.
I do not have much data on this, so I cannot comment.
All right. Kunal, would you want to take this one by any chance in case you track Nureka?
No, I don't track the
Considering
stock.
it's a very fairly recently listed company.
Yeah, it seems like, and which is why we won't be able to comment on it.
Right, absolutely. Point taken. But a good set of sort of a rally coming in this particular counter. If you look at Nureka on the charts as well. Let's move on to the next query, and this one is coming from Bhargav. He wants to know the view on BPCL, whether it makes sense to buy the stock at current levels. Kunal, what's your take on BPCL?
Bullish on OMCs. In fact, I think a week back when BPCL was at 445, 450 range, I had also given a buy call anticipating the breakout. So finally that breakout seems to have happened for BPCL. The results as well has been out. So I think that event is also past us, and even post the event, the stock looks fairly attractive. So I would sense that BPCL and the entire OMC pack, I think you should also look at something like IOC as well as at current levels. All the three stocks from the OMC pack look strong. But then if you're looking at slight edge towards momentum, then I think give more emphasis towards IOC. That stock I believe is heading towards 125, 130 in the very near term. So that stock could probably be now acting as a short-term leader for the group. But yes, OMC pack I'm extremely bullish, and you can look at BPCL as well from a slightly positional play.
Okay, I want to take this opportunity, Shaina, to come to you as well on BPCL, because really it is the talk of the town today. All three OMC companies have actually beaten the street's estimates, but particularly BPCL seems to be trading quite strong on the back of that very strong dividend also that it gave out. What's the view on the fundamentals? Would you buy at this juncture?
Well, I think one can also buy at the current levels, because if you see the dividend yield is as good even at current levels of about 17%. And once this is behind us and the stock corrects for this, post the dividend, then we would have the the story evolving for the disinvestment of BPCL, and there could be some good bits coming in, and price of 415 to 450 is definitely on the cards, post the dividend that's out of the way. And as we've seen crude oil prices moving up, the numbers that have come out for BPCL on for the GRMs have been pretty healthy. Most of the other, in fact, all the other companies also have been reporting good GRMs improvement for the oil marketing companies. So I think the sentiment is positive, and one can even be buying at current levels.
Okay, this next one I think will make your eyes light up, Kunal, because I think you recommended this stock earlier in the morning. Rajiv is asking about Engineers India, which he bought at levels of 97, which is still about 10 rupees or so higher than the current market price. Should he hold on to this investment?
I think you should hold on to your investments over here, and there are some very, very encouraging signs for the charts for Engineers India. And particularly, we tend to give more emphasis towards price. But when you look at the medium-term to long-term charts, you tend to give more emphasis towards indicators as well in certain time zones. And for Engineers India, what has happened is that the stock has made a fresh, high for itself, swing high for itself on the monthly chart indicators, that's on RSI. Now this is a very encouraging sign, which means that the momentum is coming back again. So look at the stock, it's up 20% so far this month if I'm not wrong, and with momentum on its back, I think there is a very high probability that Engineers India could scale up significantly higher from current levels. My sense is that possibility of the stock hitting a 3-digit mark over the next maybe couple of months is extremely high for the stock.
Okay, that's a call on Engineers India. Certainly has had a few sessions of absolutely stellar gains. Route Mobile is trading a little bit weak in trade today, down about 1.8% or thereabouts. We've got a question from Sangeeta, who's bought at levels of 1,440, making quite a reasonable amount of money on this trade. She's wondering whether to move to Birlasoft though, and this is another counter, Shahina, that's done pretty well for itself since it reported its Q4 earnings. Would you think that shift makes sense?
I do think it makes sense to shift from Route Mobile. The main issue out there is not the performance. The performance was pretty healthy. But if you see, the valuations are very expensive. It's about 66p if you take current year numbers, that is FY21. And even if you assume that they could grow about a 20% from here on, it still is expensive versus some of the other competitors. I would say something like a Tanla Solutions, or as you mentioned, the investor, if they have an interest in some other, I think like Birla, I think that also looks a bit better on terms of valuation. So on pure valuation basis, similar business, I think a shift would be reasonable.
Okay, let's pull up Titan. In fact, Titan was quite a positive story in yesterday's trade, but this is a an options question, Kunal. I think it is for you. Obviously, it is for you. Ritesh is asking, and I'm going to read this out to you because probably this will make more sense if I take the whole question. Since Titan yesterday closed near triple top and not above it, holding its June 1640 call, is it reversing from top? Is the question.
So again, interesting question. So I think we discussed about this stock I think yesterday or day before as well, that how the stock is very close towards or inching towards a breakout of the triple top. Now, triple top resistances are very tough, resistance to break. So look at it in this way, that the markets are taking, multiple attempts to try and break past the resistance. At times they may take 3, at times they may take 4 or 5 times as well towards the breakout of the resistance. But whenever that happens, the breakout, probably gives a new range shift, behavior for stocks. So I think in that aspect, since you bought June 1640 call, I think you should hold on to your investments over here. My sense, again, as I said, that whenever this breakout of the 1600 mark happens for Titan, it could lead to a very swift and a sharp breakout on the upside. So buying an out of the money call, and it's not as if that it's a very deep out of the money call. So I would suggest a hold on Titan and just wait for that 1600 mark breakout to happen. The markets are in full swing, so whenever the overall market trend is quite bullish, there is always a possibility, a high possibility which you can attach towards breaking out of key resistances.
Sandeep has got a question on Happiest Minds, and it's really a simple question, Shahina. Would you buy at this juncture, or would you wait a little bit?
Well, I would wait because Happiest Minds, there again, we saw phenomenal numbers that came out for the fourth quarter, and growth is expected to continue. But at the same time, valuations are extremely expensive. So I would not enter at current levels. I would wait for a dip, and maybe, somewhere close to about 700, 750 levels would be a decent valuation level to get into the stock. But I think valuation wise is the only issue. Otherwise, they're doing pretty well because most of the business is US driven. It is, where the margins are likely to improve going forward also. So I would hold if I'm a very long-term investor and already hold the stock, or then I would wait for much lower levels.
From Sagar, and he's saying he wants to know the view on Honeywell Automation, and he's saying that this stock is like a family member to me. My father and mother both have bought 1,200 shares at 2,500 per share levels since 2013 is when they are holding Honeywell Automation. So he wants to know whether they should continue to hold on to the stock. Kunal, what's your view on Honeywell Automation? For Sagar, it's like a family member.
Well, yeah, I think looks extremely strong on charts. I think there's been a absolute money spinner, for as a stock over the last 7, 8, 10 years. I think I remember the stock being at I think levels of 3,000, 4,000 just about some 6, 7 years back. So it's moved up trend. It's moved up into a strong uptrend. And when you have such kind of classical stocks in your portfolio, I think the best best strategy is to try and hold on to the stock and keep a watch on a lot of the fundamental factors as well. So I think till the time these factors remain positive for stocks, the uptrend would continue, and the stocks, they keep on moving up higher, and they become HNI as well as ultra HNI favorites. So I think Honeywell Automation as well, I think a stock is a stock in that aspect. I would suggest a hold on the stock, specifically from a longer term view.
I think you spoke about this, Kunal, a few days back. You said that if there is a significant corporate action or if there is a major event in a particular counter, that you should avoid playing out of the money or significantly out of the money options at that moment. We've got Sherry who's asking how you would play Sun Pharma at this juncture. Wondering if there is a significant beat on the earnings, if you can use that as an opportunity to place a trade. How would you trade it though?
So I would I would wait and watch for the results to play out, frankly, Alex, because what's actually happening out for stocks like Sun Pharma is that the stock is taking time to break past about its resistance. It's not a stock which has gone into a very high pace and a very swift momentum on the upside. It's a stock which has moved into very steady periods of uptrend. So either the result has to surprise extremely positively for the stock to change its behavior, or if it's a status quo kind of a result where the market takes it in a slight positive stride, then you might see the same behavior continuing for Sun Pharma. So buying deep out of the money calls, for example, an 800 strike for Sun Pharma may actually not turn out to be a good strategy. Let the stock break past about the resistances, and the manner in which it breaks past about the resistances, that typically should determine that how far out of the money we should be looking to buy the strike. So I would wait and watch as of now for buying out of the money calls or deep out of the money calls for Sun Pharma.
From Raghu, he's saying that he's holding Petronet LNG 260 shares that he purchased at an average cost of 242 rupees per share. He's holding this for the last 2 years. He wants to know what's the long-term advice coming in for Petronet LNG with a perspective. Actually, he has about 3 year plus is what he can hold on to. He wants to know whether he should stay put so that he can get good returns, or should he switch to another stock? Shahina, what's your take coming in on Petronet LNG? What should Raghu do with his holding?
He can hold it as of now, I believe, but there is going to be a lot of, ups and down moves on the stock going forward for some time, because it is one of the holdings of BPCL, and BPCL will now have to decide what to do with its holding in Petronet LNG. So if they were to actually sell it in the market, or that would see some pressure on the stock. On the other hand, if they would hold and then there would be an open offer, that could see a big move upside. So I think on pure business, it's good, because you have a good volume that is going on in terms of both their facilities at Cochin as well as in the western region. But at the same time, I think the stock will be now more driven by news rather than fundamentals.
Okay, Ajay has been tracking a stock called Triveni Turbine. It's a small cap company with a market share of just over 3,400 crore rupees. And its volumes aren't significant, but it's done particularly well for itself over the last year. And in fact, it is up about 1% in trade today. He's asking if there's any chance, Kunal, that you have a view on the technicals and if you can offer any advice.
Yeah, I do track the stock on and off. Seems to be a decent trending name. I won't say that it's a classical stock as such. It's a stock which is doing its own bit in a market which is raging in such a strong fettle. So I think in that aspect, the stock has also done pretty well from levels of 50 around 12-13 months back. It's risen up to almost 103 levels where it's currently trading. So as I said, it's a stock which has done fairly well for itself. Looks to be in a good trending mode. It goes through a period of rally and then a consolidation. So these are healthy signs. If you are already invested, or if you're looking to buy, then I think at 103 levels, you can look to hold on to your investments, or you can look to buy depending on the stance in which you have. And I think from a medium-term play, another 6 months to 9 months at least, you can look at 125 to 130 as a moderate target range for Triveni Turbine.
All right, our next query is coming in from Rajiv. He's wanted to know whether he could get a view on NBCC, which he's holding at 40. NBCC basically, does it make sense to exit or hold? I think he's holding on to the shares from the levels of 48 rupees per share. What's your view on NBCC, Kunal?
So, a very high beta stock, but a stock which has relatively woken up a bit late in this last 12-13 months of market rally. Now we need to particularly see the behavioral change for stocks like NBCC. Now whether this is just a short-term rally, a pickup of underperformance, or whether this is a strong bout of catch up with the stock and play as compared to the rest of the peers. Now for that to determine, the stock has to break past about certain resistances. So first resistance for NBCC actually comes across closer to 55 or 56 levels, which was the 3-month, 4-month high for the stock. So if it manages to surpass and break past about that 55 zone, is where we can attribute that the stock is now restarting an uptrend for itself, and that could be a good opportunity for you to enter specifically from a longer term view. So I would suggest a wait and watch approach. If you're already holding it, then I would suggest a hold, but then add only if the stock breaks past about that 55 plus hurdle.
Okay, we've got a question coming in on a stock that I think has been quite interesting, and I'm coming to you on this one, Shahina. This is on IEX, and this question is coming in from Rusi, I believe, on YouTube. So he points out that there's been quite a bit of selling recently in the stock, and it's dipped in the recent past. But would you buy at this juncture, or would you hold on to investments made into this counter?
Actually, as of now, there is some bit of positive sentiment around the stock, given that there is news that there is another. I believe even BSE has announced that it is planning to come into set up some platform for power exchange. So I think there is some negative sentiment, and this could see the stock correct a bit. So if I want to buy, I will wait for some time, wait for the correction to get over. But fundamentally, I think IEX is in a very strong position. If you know, power trading in India is just about 4 to 5%. In fact, it's absolutely less than 10% as of now, inclusive of all exchanges. And we have internationally, it's as high as 35 to 40%. So the opportunity is huge. So if one is looking at the long term, you can get in, but do wait for some time, let this correction get over.
All right, Kunal and Shahina, I'd like to request you to hang in there. We've got some news break coming in on Tata Motors, and what exactly are we picking up from Tata Motors? My colleague Utkarsh Chaturvedi is joining us for more details. Utkarsh, and I believe the exclusive story that you're picking up is about the MD and CEO of Tata Motors. So what are your sources telling you on that front?
When of Gunter Butchek in the renewed contract after February. Now, what I've been told at this point of time is the fact that negotiations between Gunter Butchek and Tata Motors have started, and there is a possibility that Tata Motors might keep Gunter Butchek till the end of the year as an MD and CEO. But there are still a lot of things which are being discussed. One is very important that they've been communicated with Gunter is currently in Europe, and he wants to stay in Europe and work from there till the end of the year. Now, that is something which Tata Motors is still mulling about, whether that can be a possibility. There is also one more thing, that there can be a consulting role for Gunter Butchek in the smooth transition if a new MD and CEO till the time comes in, can also be decided. And in that position, the internal management, Shailesh Chandra, who heads the PV, and Girish Wagh, who heads the commercial vehicle business, will be given in charge, and on a consulting basis, Gunter will be taking care of it. And there can also be a possibility that Gunter will not, renew his contract, and Shailesh and Girish might really take this forward. But at this point of time, all the probabilities are open. As I said, the likeliness is that Gunter might continue for a while. In what role specifically, we do not know, because of the fact that there's transition which needs to happen. The passenger vehicle business needs to get into a different subsidiary, and the company believes that they need to have either an MD CEO or somebody really guiding them at the top for this whole transition.
Absolutely. Clearly a stock, Utkarsh, in focus today, gaining as much as 2%, right on the top of the Nifty gainers right now, just behind WIPRO. But you've probably been seeing on the bottom of your screen the flashes that have been playing out, and that's from the RBI Annual Report, and quite a few important statements being made by the central bank on the state of the economy and what really the government needs to do to ensure that solidity is maintained as far as the economy is concerned. Priyanka has been pouring through that document, and she's joining us now to tell us more about it. Priyanka, it's going to take you perhaps a few hours to go through every word, but what have you picked up in the few minutes that you've looked at it?
Well, yes, that is right, but there are quite a few important highlights that, we can talk about at this point. One is the commentary on the macroeconomic impact of the second wave, and RBI says that it will be limited only to the first quarter of FY22, and there could be possible spillovers to July, but they do not anticipate it to go beyond that. So that is something very important coming in from the Reserve Bank of India. They've also said that for April and early May, the available indicators are presenting a mixed picture at this point in time. mobility and sentiment indicators have moderated and several activity indicators have held on their own. They've shown resilience, is what the RBI is saying. Very importantly, the RBI has also commented on the private sector, saying that private investment is the missing piece in the story of the Indian economy in FY21. So reviving it is quite important. They've said that reviving it awaits an environment in which animal spirits are rekindled and entrepreneurial energies are released, so that backward and forward linkages and multipliers prepare the ground for a durable investment-driven recovery. So that is what the RBI is trying to push for, that there should be an investment-driven recovery going forward. The private sector that is missing should come back on its feet, and there should be further capital investments. They've also spoken about how the monetary policy stance is going to be going forward. This is something that the RBI has said repeatedly as well, that it will be the policy, the conduct of the monetary policy will be guided by evolving economic conditions, but the idea will be to support growth till it gains traction on a durable basis, while ensuring that inflation remains the target. So very clear path for monetary policy has been laid out, that they will continue to provide support until growth is completely durable for a long term. And also the CPI inflation trajectory, RBI has said, is likely to be subjected to both upside and downside pressures, and a combination of high international commodity prices, logistics costs may push up input price pressures, something that we have been seeing for a while. RBI expects it to continue. So all of this we will have to watch out for, but very important commentary coming in from the Reserve Bank of India in their annual report.
Thank you, Priyanka, for taking us through the highlights of that RBI annual report, where, like Priyanka mentioned, a lot of crucial pointers coming in from RBI on the macro condition. But let's take a look at what the markets are doing currently. If you look at Nifty, it is actually holding above the 15,300 or levels, nearing the 15,350 levels. Remember, we've actually seen pretty flat moves on the benchmark indices since morning. For now, actually looks like it's picking up some steam. But we still have Kunal as well as Shahina with us. And Kunal, I'll come first to you. Let's talk about the high risk and low risk ideas that you have for the viewers today.
Ideas. One of the ideas which I would want to recommend is a Barn Z Entertainment. I think that stock, which has seen some very strong and interesting F&O built up in the last 3-4 days, is now getting back on the verge of a big breakout around this 220 mark. I think it's a big resistance for the stock, but it's preparing pretty well with good built up on volumes both on the cash as well as on the F&O side. So buy with a target of 240, stop loss to be kept at approximately 198. The second is what I would suggest is a Barn Engineers India, a stock which looks extremely strong. Discussed this earlier on the show as well. So would suggest a Barn Engineers India for a target of potential 100. That's a 3-digit mark for the stock, and stop loss could be kept at 80.
All right, let me go across to you then, Shaina. What are the two ideas that you have for us?
I'll go with the high risk first. The high risk is Bank of India, which is really high risk because this is dependent on the disinvestment program of the government. I believe that with 89% holding of the government in Bank of India, there is a high chance that this could be one of the candidates because it is not a candidate of the merged banks. And with the price to book ratio of just 0.3, I think if at all we have any news come out on this front and Bank of India is one of the candidates for disinvestment, then we could see a really good return. And the return, my stock target at that time would be about 90 rupees. And you can hold it with a stop loss of 65. The low risk idea is Kaveri Seeds. Here it's a debt-free company. Valuations are just 10 times P. This will be the third year of good monsoons that we have. And cotton seeds accounts for a chunk, almost about half of their revenues, which actually is seeing a very good sowing season this year. Cotton seed prices are pretty stable. So I would buy Kaveri Seeds with long-term holding with stop loss you can keep of about 690, and my target for a year would be 860. And I hold both the stocks personally.
All right, then on that note, thank you Kunal as well as Shahina for joining us on the show, talking about your high risk, low risk ideas and also resolving the viewer queries. And on that note, we'll slip into a break on this edition of Buy Now Sell Now, but stay tuned, more on the other side, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And as the May expiry day is here, Jayesh is joining us to take us through the stock trends as well as the trends that's been for the various indices that's been observed in the May series. Jayesh?
The May FNO series has been a steady one with all the frontline as well as benchmark indices gaining for the second series in a row. The rollover picture also, as you can see from your screen, has been more or less in line with what the 3-month average has in fact suggested. But coming back to the index performance, the Nifty as well as the Nifty Bank have surged more than 2.5% each, while it's the broader market indices, which is the small and the mid cap space, which have gained more than 5% apiece. Now this series has been dominated by the PSU stocks, both the PSE as well as the PSU bank stocks. The indices have surged more than 10% each for both of these. However, it's the Nifty Media that has surged the highest at about 14%, followed by the Nifty Realty, Energy and Auto Index, along with the Nifty Pharma Index that have surged anywhere between 6 to 7.5% each. Then you have the Nifty IT, Infra, Metals as well as FMCG and Financial Services pack, which have surged a little less than 5% each. In terms of the stock gainers, you have a few large cap names featuring in the list, the likes of UPL, Indian Oil Corporation as well as HPCL, which have advanced more than 20 to 30% each. And then you have BHEL, which has surged more than 50%, and India Bulls Housing Finance also has surged more than 20% in this series. Talking about the losers, you have the likes of AU Small Finance, which have declined about 14%, along with JSPL. Similar decline for that as well. Bandhan Bank, Info Edge and Tata Chemicals, which have also managed to decline anywhere between 8 to 12% during the month of May.
Thanks so much for that, Jayesh. Now, clearly today continues to be a day for IT, even though you've seen a rebound in Nifty Bank. Nifty Bank currently trading in the green, but IT, MINETREE is one of the stocks that's gaining handsomely in trade today, up over 5%. And that's on the back of an analyst call that was done by the management not too long back. MINETREE has in fact guided for double-digit revenue growth in the current financial year. Poonam Sane is joining in with the key takeaways from that call. Poonam?
Well, watch out for MINETREE at the Analyst Day meet. They have reiterated the FY22 guidance of expecting industry-leading double-digit growth as well as an EBITDA margin of 20% plus, and this is exactly what they had stated even during the time of earnings season. In fact, they would be focused on 6 key vectors and key white space opportunities. The vectors would be increasing wallet share with strategic accounts, a higher focus in Europe and continued hiring in the regions of Europe, for example, Nordics, industry partnership as well as consulting, marketing and thought leadership, filling up the white space opportunities and also partnering with cloud hyperscalers. They would be deepening their relationship with cloud hyperscalers. They already have joint go-to-market initiatives with key large hyperscalers like Microsoft Azure, Salesforce, Amazon, Google as well as ServiceNow, and they do believe that every $1 spent in cloud ecosystem translates into $1.5 spent in the IT services. In terms of the white space opportunities, they would be focusing on healthcare vertical. Within that, it would be nutrition and medtech, and also in terms of the regions, they're targeting to enter Japan, wherein the parent itself has a large presence, and also regions like Middle East and Asia Pacific. Focus is also in changing the delivery model to the new normal in the post-pandemic world, and hence the strategy is of enhanced customer experience as well as change in talent supply chain and no-show distributed delivery model. So watch out for MINETREE. They do expect an industry-leading growth there.
Thank you, Poonam, for that. Definitely, MINETREE is actually seeing a sharp uptick in today's trading session. Moving on, Shark Tank's billionaire investor Mark Cuban has invested in a made-in-India blockchain startup Polygon, which is actually in the list of top 20 crypto token firms globally. My colleague Nayantara Rai caught up with the co-founder and CEO of Polygon in an exclusive conversation. Listen in to the excerpt of that particular conversation.
When we started, we didn't know we will be we'll be reaching here. And I think with Mark Cuban, we will be truly decentralized and the global product as you see. He's been a great, frequent user of Polygon, and he has been using multiple applications which are deployed on Polygon. So I think he is our user. So I would say he has been user before he was our investor. So I think it's a good to have a investor as well. Yeah.
So tell me something, Jayanti. The last couple of weeks have been absolutely crazy, right? Like see the massive wild swings in pricing. Now, it's said that for an ecosystem is never so good when you have so much volatility. But if I look at Polygon, how did Polygon not be affected by what was happening to the Ethereum price, to the Bitcoin price? In fact, Polygon became more valuable during that volatility.
Yeah, I think always price is more of depends on the product market fit which product achieves, right? What Polygon we have at Polygon is that 400 plus applications running on Polygon, right? We have billions of dollars locked on the Polygon, which people are using on daily basis. They are using for the financial applications, they are using for the transfers, and multiple games and identity platforms and multiple other applications, right? So what we have is actual usage, not just a speculation underneath. We have a usage, and that makes us very valuable. So people are betting on our future instead of just speculating, and that's why if you see the other blockchain projects, let's say competitors of to Ethereum and any other L1 projects, layer 1 projects, they're kind of near to zero usage there, right? So people are basically speculating there. But for us, we have a users, we have a people who are building on top of it. We have a startups which raise money to build on Polygon, right? Yeah. So we have a value underneath, and that makes us very valuable. And I think that's a.
But Jayanti, that is your USP, and that is what is your differentiator. What is going to happen when Ethereum on its own is going to be offering options for scalability? Because then you will lose that, right? So how will you stay this valuable?
So there are many kind of scaling solutions on top of Ethereum. We have a rollups, we have ZK rollups, and that's what we are going to do as well. So we have a currently one framework which we use as a to scale transactions, right? It's called kind of Plasma, and we have second one is POS, right? What we are going to do as a Polygon in our future roadmap, we will have a multiple kind of scalability solutions, right? And it won't be the same as the other scaling solutions. It will have a Polygon spin on it, right? What we have is kind of very user friendly. It will scale like crazy amount of transactions, even if we have a roll up or ZK rollups, because we are going to launch multiple products on top of it. It makes us kind of suite of products, right? For your scalability. So let's say so for application, let's say if you're building one applications on Polygon, you have a different kind of option to choose from for your scalability platform, right? And that's basically increases dependency on the Ethereum as well. So we are kind of complementary to Ethereum in that sense. And let's say if Ethereum scales as a Ethereum 2.0 roadmap, our user will have a more space for and less fees for the deposits and withdraw from Polygon, from the Polygon chain. So it will basically beneficial to our users in future.
All right, well, that's the latest coming in on the startup front. Let's take you through the BNSN quiz that we had asked you earlier today. In fact, we had asked you which FMCG company among the options that we provide has the highest market cap. The options that we gave you were Britannia, HUL, Nestle, and ITC. And the answer that quite a few of you got right was HUL. We had quite a few winners, but I guess this time it's fastest fingers first. Naveen, Ayush, and Ravi Kumar, thank you so much for participating. You are the BNSN quiz champions for today. And on that note, we're completely timed out on this edition of Buy Now, Sell Now. It's been an absolute pleasure bringing it to you from Cheryl and myself and everybody else that put this show together. Thank you so much for watching. Up next is Markets at Noon, so do stay tuned. This is ET Now.